discussion for the next 60 to 90 minutes. So please keep a piece of paper, a pencil or a pen with you. I'm very old fashioned, so I generally keep a pencil. Please make sure that you keep it. If you want, go get it and then sit down. Okay, sit down in a calm place, right? Yeah, sit down in a calm place and then we will start the discussion. Okay, I'm just going to give a couple of minutes for more people to join, right? Awesome. Nice to see all of you here on a Saturday evening. It's so nice to see everybody. Cool. I think a lot of people joining in now, right? Awesome. I request everybody to keep your questions. Keep your questions. Don't think of any questions now. Let's sit with an open mind, right? And then let's start the discussion. All right. Good evening, everybody. Good evening, everybody. Can all of you put in your comments? How are you all? I hope all of you are healthy, happy, right? Yeah, just wanted to know how all of you are before we start. I have a couple of minutes before I start the session. I have prepared really well for the session. Okay, so make sure that you guys are. Yeah, how are you guys? How's everyone doing? Awesome, awesome. I'm doing great as well with God's grace. Yeah, all good, all good. Awesome, super. Thank you so much. Thank you so much. All right, great. Couple of more minutes. Those of you who have not pressed that thumbs up button in YouTube, please press it. It's not for me to feel great or anything, not at all, right? It's just that I think YouTube has some algorithm. It just pushes it to more people. Uh, a lot of, if somebody is interested, they would probably be joining it now, right? So just a small request. That's all. Great. Okay, quick question. How many of you watched the emergency fund video? It's got more than some 6,200 views now. I just wanted to check how many of you have actually watched the emergency fund video. Just type a yes, I have watched. Just to see whether our interaction is working, right? How many of you watched the emergency fund video? Only four. Keshavji, Silen. Oh wow! Awesome, awesome. That's absolutely fantastic. Absolutely fantastic. Shrikantji, wow, completed 6 months. Thank you, Shrikantji. That's so nice. Awesome, awesome. Okay, super, super, super. Great. One more minute. Wow, Akshay, you watched and downloaded. Okay, now next question for everyone. How many of you have started thinking about building an emergency fund? You know, how many of you have actually started the process? Anybody here who have at least started? Probably we're in the end of this month, middle of this month. Any of you have started? Awesome, awesome. Really nice. Really nice to see that. You know, to be frank, these sessions I'm doing so that there is some impact. Okay, in terms of what it is. Okay, cool. I think let's just begin. We'll begin now. One last time, just for the new people who have come in, right? I'm sure that this will probably a lot of new people will start coming in, right? Uh, Please keep a paper, a pencil, or a pen. Sit down in a calm place. If some of you are just coming in just to chill out or just passing by, better you leave the meeting and then you can watch this again. I'm going to put it up and everybody can watch it. Those are with me here. It's a serious session. We're going to sit for 1 hour. We're going to understand every damn thing possible about the topic. Okay, so those who are here, sit here with full Josh, and then let's just start off. All right, it's not a fun session. It's of course a fun session, but we will have a heart-to-heart discussion. Right. Last time I tell everyone, please press that thumbs up button. It can reach more people. Let's just begin right now. Okay. Um, Friends, for the next 30 seconds, just close your eyes and let's just pray for everybody who's going through tough times now. Okay. The markets have been exceptionally kind for all of us. We'll just start with a small prayer in our own hearts and then we'll start the session. Because this session is something which I really wanted to talk about from a very long time. And, that's why I request that those who are serious, please sit here. Okay. Rest of you can really move on. I'm not looking at number. Just 30 seconds. All of you just close your eyes and just pray for everybody who's going through tough times right now. Let's just pray that everyone has a healthy, happy life. Many of us are really blessed and fortunate, and let's just pray that everybody else gets the same kind of benefit. Thank you so much. Okay, guys. Great. Okay. Now, the topic which I kind of chose for this particular session was markets are hitting all-time high, right? So, what should we do? What should we not do? What are the things we need to keep in mind? What are the things we can avoid? These are the kind of questions which I wanted to discuss today. Okay, so for this, I have a beautiful flow which I've created. As I said last time, our interactive session is going to be in a particular format. uh, I request all of you to sit down, listen carefully. It's a very interactive session. I'll be asking you questions at the right time. I would love you to just respond back in chat, right? And we'll take, there'll be certain times when I want you to respond, certain times when we can just have an interaction where I would be sharing my thoughts as well. Okay, so keep an open mind. This session is going to be a very, very life changing session for all of us, including for myself, because every time I do a live, it's going to change my perspective also, or going to affirm it. Okay, so cool. The first question I wanted to check with you: how many of you felt that this topic is relevant today in today's context? Right? Can you just put in the chat that yes or no? How many of you felt? Because there are so many thoughts going on about why the market is going up, why the market is going down, right? So I felt that this is something which we all need to understand. So let me see how many yeses are there. Awesome, awesome, right? So it's pretty relevant for all of us. Okay. Second question. Second question. Let me wait for all the chats to come. Those of you who have not pressed that thumbs up, please press it so that more people can get to know about the session. This is the last time I'm telling. I hope I don't have to tell it anymore. Okay, those of you on YouTube. Okay, great, awesome, awesome. Now, second question, just for me to understand, right? Okay, great. I see a lot of yeses, right? Second question is: how many investors or traders are there in the session? Just want to understand, right? How many of your investor friends? How many of your trader friends? There's nothing wrong. I have a lot of trader friends, a lot of media friends, a lot of investor friends. So I understand there are many ways to make money, but just wanted to understand how many of you are here from a very long-term investment perspective, and how many of you here from a trading perspective? Both are fine. Just wanted to understand. Okay. Awesome. I see a lot of investors here, right? Yeah, I'm a fundamental investor, FI Invest India. So I know that a lot of you are here because of the long-term investing mindset. There are few trader friends. I appreciate that you came for this session, really, right? It's amazing, right? Trader and investor both. Excellent, excellent. Okay, so now, I kind of understand that a lot of you are long-term investors here. Few of you are trader friends here, but let me assure you, this particular session today is applicable for everyone. Okay, it is not only for investor friends, not only for trader friends, right? Any kind of person who's in the markets today, this is going to be applicable. Be rest assured. Okay, be rest assured about it. The first question now. Okay, I think we can all stop typing now. Okay, let's get to the next level, right? Next question. Okay, I hope some of you are just writing down few things. Okay, no problem about it. मार्केट ऊपर है, मार्केट मार्केट नीचे है, शेयर बाजार ऊपर है, शेयर बाजार नीचे है. Market is up today, market is down today. What is the meaning of this sentence? Market is up, market is down. What is the meaning of this particular sentence? Can any of you type and tell me? What is the meaning of this sentence? Market is up today, market is down today. That market means what actually? Shouldn't we all understand that, right? So let me get your thoughts first, right? Perfect, right? Satish saying investment amount up or down, share prices are rising, demand and supply equation, profit loss, Nifty Sensex, bull, bear, greed, fear. Prahlad says, depends on what you want to listen. Yes, perfect, right? Very good. Okay. I think many of you got it right. So, right? Many of you got it right. Uh, Investor sentiment is positive or negative. Very, very, very good point, Akshay. Right? Average of top 50 companies is green. Right? Perfect. Okay. I think we'll stop typing now. Okay. Just to get the perspective. See, in India, let's take the Indian markets, right? And this is a concept which applies anywhere, all across the world, across all investable markets around the world, right? Market, when you hear market is up or down, what it really means is most people refer to the Nifty index and the Sensex index in India. Okay, Nifty is 50 companies, Sensex is around 30 businesses. Okay, now first thing to understand, okay, Nifty, and out of thousands and thousands of companies which are listed across the Indian stock market, across the two exchanges of India, Nifty caters to 50 top companies and Sensex caters to 30 companies. Okay, this is the first thing which you need to understand. Now, Nifty, what you see on screen, and Sensex, what you see on screen, is a weighted average of the prices of the 50 companies in Nifty or the 30 companies in Sensex. Okay, why weighted average? Because if you look at an index, there are certain companies which hold a larger weight and certain companies which hold a smaller weight. Okay, please understand this. Okay, market upar ja raha hai, market is going down, up. The first thing which you need to understand is market means the Nifty or the Sensex, generally when you hear it anywhere. Okay, right? If this is understood, what this means is, how many of us are invested in the index? How many of you are invested in the index in Nifty or Sensex? Can I see here? How many of you are invested? Can you put in the comments? Let me just try to understand. Because we are all worried about the markets up and down. So let me first understand how many of us are invested in the index markets completely. Very good. Right? There are some of you who have invested, some of you who have not invested, right? Isn't it? Awesome. Okay. Now, I see a lot of no's. Okay. I see a lot of no's. And I know that because I don't think there is anybody here who's 100% only investing in the Nifty index. However, there are few of you here. There are definitely few of you here who are investing in the index. I know that. Okay. So this is perfect. Now, tell me one thing. Tell me one thing, friends. Those who are not invested in the index, that means you're not partaking in those top 50 or top 30 companies. Why are you worried? Is there any reason for us to feel worried? When we are not part of those 50 or 30 companies, when we are investing in so many other businesses, our mutual funds are holding so many other businesses also, or we are invested probably in some smaller companies, undiscovered companies, or some slightly medium companies or big companies. So you tell me, is there any reason for us to worry when we are not really invested in that index, but market is going up, market is coming down? This is what we generally listen. Okay, this is the first thing which I'm just giving a food for thought for everybody. Okay, now please understand that. Please understand that when the Nifty is falling, that is that 50 companies weighted average is falling, or the Sensex is falling, automatically sentiment becomes low and all the companies start falling to a certain extent. Do you all agree? Have you all seen that when the Nifty and Sensex starts falling, all your business is also suddenly falling? Are you able to see that? Can you give me a thumbs up, or can you give me a whatever yes or no kind of answer? How many of you observed that generally when the Sensex moves in a particular direction, your stocks also generally, I'm saying, it's not, of course, exceptions will be there. But general thing is that you see that, oh, market is panicky, 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 and suddenly all your stocks also looking red, right? Or market is doing really well. When market does really well, sometimes what happens is our stocks don't do so well. Okay, that's also possible, right? Yes, I see a lot of thumbs ups. Excellent, excellent, friends. Okay, we are on the same page right now. Please write this down. Write this particular thing what I'm telling down. Okay, in your paper. In short term, all the stocks will undergo correction when Nifty or Sensex falls. It will. In short term, it will. There is absolutely no doubt. It has to. It will fall because when the Nifty starts crashing or correcting, investors will get into a bear or a selling mode, especially trader friends. Okay, they will get into. However, in the long term, if you look at a period of 8 to 10 years, you will find absolutely no correlation, friends. You will find some businesses which have become 100x. You will find some businesses which have gone down by 80 to 90%. In spite of the index giving a particular CAGR over 10 years, you will find companies which have given multi-bagger returns. Some companies which have given 25% CAGR, some companies which have given 12% CAGR, some companies which have given less than 0% CAGR. Have you seen that? Have all of you seen, irrespective of how the market moves in 10 years, haven't you seen stocks doing exceptionally well or exceptionally badly or somewhat medium good? You know, haven't you seen that? Can I see a yes or a no? Tell me. Truthfully, haven't you seen great businesses doing exceptionally well? Okay, perfect. Yes, I know that we have seen. Okay, so now please understand, market is at all-time high. What should we do? That is the question. Okay, all of us have understood what exactly market means. We have understood should we worry about the markets or not. And now what we are seeing is that market is at all-time high. What should we do? Are all of you liking the flow? Are all of you liking this flow? We'll take it awesomely. Okay, the real points are going to start now, but I wanted to put that flow. Okay, friends, if any of you are putting stock names here, please leave the meeting. Not at all required. I'll have to block you and all that. It's not necessary, right? Right? There are so many good businesses, bad businesses. Why you want to come here and put stock names? It's not necessary, right? Whether it's some power company or some airline company. Why to bring it here? Right? We are having a very generic discussion. It's a please small request from my side. Okay, please help me out with that. Now, what we're going to do is markets is at all-time high. What should we do? That's the question. Now, I'm going to give you 10 points. Okay, I'm going to give you 10 points, right? And you can give your opinions whenever I give time for that. Okay, so it will become a beautiful discussion. Otherwise, it will become hodgepodge. Okay, I'm not going to read any comments until I ask questions. Okay. The first point is market is at all-time high. What should we do? That's the topic. The first point which I want to tell you is step number one: focus on your work. All of you are having some particular work which is giving you your rosy routine. Okay, every day you're able to eat, take care of family because of somebody who has employed you and you're working with somebody. Okay, so the first point for everybody is focus on your work. If you're a student, focus on learning, focus on understanding what you're going to contribute tomorrow, right? Please remember that whatever you are doing today, right, try to upskill yourself, try to become the best in your particular job. Okay, become excellent in your work, earn more and more and more. Okay, the first 20 years of work is glorious. Do not miss that opportunity by trying not to work hard at your work. Try to really work well, earn more, focus more, upskill yourself, and make sure that you become the best in what you do. Earn much, much more. Because let me tell you, the more you earn, the more you can invest. The more you invest, the more the fruits in the longer term. So the step number one is please focus on your work. Okay, how many of you agree to that? Because I have 9 more points. Don't worry, we will touch all the aspects. but I want to give a very holistic picture for both investor friends and trader friends. So the first step, focus on your work, upskill, earn more, earn more, so that you can invest. First point is clear. Okay. Those who have the first point ready, just hit that thumbs up button. If at all, so I want to see. There are some 106 people who have agreed with me. Let's see. Okay. All right. Awesome. Great, great, great. You guys are such a nice audience, So sweet, sweet audience. All right, cool. Awesome. Okay. Now, second point. Second point. Step number one is clear, right? Please do that. Okay. It's at all-time high. Please go back and focus on your work. Point number two. Make sure that you start thinking about your emergency fund. This is the right time. Right time. Okay. I know that many of you have watched that video. Okay. This video link, right? I'll be putting it up here. I've seen some YouTube people doing that, right? They put it up here and suddenly something will come up. So, emergency fund, I will probably after this, I will just put it up here. Please make sure you watch that emergency fund video. Okay. And make sure that you understand what emergency fund means and create that emergency fund. Okay, I don't want to talk about emergency fund here because we have already covered it in the last live session extensively. Okay, so please watch that, create emergency funds. Let me give you a tip. Tomorrow is Sunday, then we go to Monday, right? Whenever you're watching this video, if the market is open, first of all, sell your losing businesses and put it near emergency fund. That is your step number two. Okay, if there are any businesses in your portfolio which is losing, I'm not talking about share price. Okay, I have seen my stocks go down 80% in spite of them being the best of best businesses, and I have no problem. They are not losers for me. Okay, I'm talking about companies where the fundamentals have really deteriorated. If you have to book a loss, also book it. Book it. Book that loss. Okay, and please put it in the emergency fund. Is it possible or not? It might be a small amount. Doesn't matter. No, put it. No, create your emergency fund, right? How many of you agree with me that you can sell your losers? At least I'm still in step number two out of 10 steps. Okay, in step number two, please first of all sell your losers. I've given the definition of losers, right? Sell them and make sure that you top up your emergency fund. Let me know how many of you are agreeing to this. How many of you will do it? Don't think twice, friends. Just do it. Okay. Awesome. Super. Doable, right? It's very simple. Just press the sell button. In 2 days, you'll get the cash. Put it. Okay? Cool. Okay? That's your second step. So, first step, focus on your work, earn more. Step two, emergency fund, sell shares. Okay? Sell your shares, which are the losers, and please put them in your emergency fund. Emergency fund will suddenly become nice and good. Then you don't have to focus on that anymore. Emergency fund, please watch that video. Step number three. I hope all of you are writing these things down. Okay. I mean, I know that it's easy. You can watch the video again, but make sure you write this because this is a heart-to-heart connection between the audience and myself. There are so many of you with me right now here. It's awesome. Okay. Third important point. Make sure that you take a term insurance. Okay. Third important point. A term insurance hardly costs a small sum of money, wherein if you die, you'll get a large amount of money, not you, your family will get it. Okay. Please take a term insurance. Now, what term insurance to take, how much to take, probably we'll have another live session exclusively for insurance, term insurance. Because I have done so much research in that I can actually speak hours and hours regarding each one of them. But for now, don't ask any question regarding that. Okay, there are enough and enough people on Twitter or YouTube. There are so many people who are doing excellent contribution, right? Excellent contribution. People have made enough videos on term insurance, right? I'm not going to make any video or anything, right? And here mainly we'll have a live discussion sometime probably, but please make sure that you take a term insurance. Okay, isn't it easy for you to Google it out and figure it out and put some time this week and make sure you take a term insurance, which will cover. Okay, all right. Okay. Pure term insurance, no money back policy, nothing, no endowment policy. Okay. Now, why no endowment policy? Why no money back policy is for another day, right? But however, please take a pure term insurance. When I say pure term insurance, you know what that means? It means that you approach a particular vendor, you give them a small premium. In case of your death, your family will get that particular uh, amount, and it should be a legal death. Okay, yeah. So uh, just to share an experience, right? Somebody told me that a person passed away on a highway where bikes were not allowed, and you know what? That person did not get, the family did not get, because they violated something there. Okay, so there will be a lot of exceptions like this which will keep coming up, but it's better to have a life term insurance than not having it. So please ensure that you take it. Okay, how many of you agree to that? That's the step number 3. Please take your term insurance, right? As I said, I'm not going to cover deep term insurance because then we will dilute this session. I don't want to get into that. Okay, can I see more yeses there, please? Right? Just have a sip of water, right? Yeah, please show me some yeses. I just want to see whether these 3 steps are very easy and doable, right? I've not gone to the other steps yet. Okay, and those of you who have not pressed that some thumbs up button on YouTube, just press it. I'm sure the audience is so good. This is the power of that button. We get the right people into this discussion. Only if you like so far, then only you press. Okay, don't just press just because FI told you or something. Okay, just press only if you like it. Awesome. Cool. Step number 4. Ready? Step number 4 is a very easy step. There are so many videos everywhere. Make sure you take a health insurance. Okay? Make sure you take a health insurance. Health insurance, again, I'll just spend some time on it, right? Health insurance. Many people have asked me questions. Okay? Let me just tell you that if you look at health insurance, first thing, right? I generally tell, right? I generally keep telling this, that make sure that your parents are covered in some particular way. Okay, make sure that your parents are covered in some particular way. Uh, the premiums are higher, but sometimes I feel no, even a 2-3 lakh kind of cover for parents helps compared to zero, right? The reason we take a health insurance is because in tough times we need not borrow from somebody, or we need not run to an ATM to get the cash, right? Uh, I request all of you not to put any comments now. Just listen to me, and then we will put it, because this is very important to understand. Okay, just park your questions. Don't ask which health insurance, what is FI doing. That's not the point here, right? The point is, I'm just going to give you some few pointers. Okay, first pointer: when you take a health insurance, make sure that first of all your parents are having health insurance. That is important. Okay, just make sure that they have. Second thing is that as far as you're concerned, right, make sure you take a floater policy for yourself and for your spouse, your children, right? Make sure that you're covered. Okay, I'm telling again and again, right? Many people ask me, if I today the health industry is so expensive, right, that we need to probably cover for 10 lakhs, 20 lakhs. You start with 5 lakhs, no, start with 3 lakhs, start with 4 lakhs, just start somewhere, right? You can always top it up, you can always increase it whenever you want. You can do it. Okay, the fourth step, right? See, the topic was market is at all-time high. This is basic checklist, right? Before getting to the rest of the steps, right? Make sure that you have taken a health insurance. Make sure you take it, right, as soon as you can. Do not depend on your company cover. I have put enough tweets on this. Do not depend on your company cover, because company cover is something which can go at any point of time, right? Hi, Prakrit. Come. Want to say hi to everybody? Okay, this is Prakrit. He just came here to say hi.
I did not come here to say hi.
Oh, what do you want to take?
I need to keep the phone.
I'll keep it. Thank you. Okay, Prakrit, you can leave now. I'm going to spend some time with my friends. Okay.
Are you recording?
Yeah, I am. Thank you so much. Oh, that's great. It's good to see Prakrit in this meeting with everybody. The good thing about these sessions are just have some fun, right? Awesome. Now, getting back. Do not depend on company cover. Please write these things down. Okay, just write these things down. You will find tweets from me on these particular topics, right? Do not depend on company cover for this, because company, you might change, you might leave your company, you might get fired, you might just want to leave your company, right? You might want to leave your company at 40, 45. You want to retire, right? That time, if you go for health insurance, even if there is one health issue, right? Even if there's one health issue, you will not get insurance, right? Okay, so that is your fourth point, right? Just a quick revision. First point is focus on your work, earn more and more and more, so that you can invest more and more and more. Number one. Number two, emergency fund, please top it up. Okay, please do it, right? And uh, next week, whenever you're watching this, just sell all the losers of your business, right? And make sure that you top up your emergency fund. Term insurance was the third point. Fourth point was health insurance. These four are very, 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 very great. Okay. Of course, this video will be available, right? Okay. Great. Now, let's go to the point number 5. Before that, one question for everybody. How many of you have taken a personal loan? How many of you are right now in a personal loan? Can you just give me a yes? I just want to see. It's just fun. There's nothing right and wrong, okay? Absolutely nothing right and wrong here. I know that sometimes we take it for various reasons. I just wanted to have a quick understanding. How many of you have taken a personal loan here? How many of you are having a personal loan right now? You're running. Cool. I see a lot of no's. I see few yeses, but there are lots and lots of no's. So there's a student loan. Okay. Excellent. Excellent. I see a lot of people who are not having a personal loan, right? Friends, there are a lot of you who are just joining in right now, right? We are in the middle of a session. Some of you, if you want, especially the guys who are joining now, just give a thumbs up there on YouTube so that it will reach more people. You can watch the video later also. You're free to stay. We are at the point number 5 out of 10. Okay, great. Awesome. There are so many of you have not taken. I think we are we are truly connected. Okay, right. I know that some of you have taken the loan. No problem at all. No problem at all. Number 2, second question. How many of you are right now? I'm sure that I'll get a lot of yeses for this. Okay. How many of you right now having a home loan running? How many of you right now having a home loan running? Please give me a big yes. Okay. Awesome. You know, having a home is such a blessing, right? Having your own home is such a blessing. I know that. Okay. Awesome. Now the yeses are coming. Now the yeses are coming. Okay. It's a nice mix, huh? Nice mix. Oh, there are so many no's and so many yeses. That's great. There are a lot of you who don't have home loans. Some of you have home loan. Awesome. Nice. Nice to see this. Great. Now, okay, all of you stop typing now. Stop typing. Stop typing now. Okay. Shall I give you my perspective? Right? Okay. All of you stop typing now. All right. Great. Some of you living on rent as per my advice. Okay, great. Okay, fine. So here are my thoughts. Okay, here are my thoughts. Right? Ready? Friends, those of you who have a personal loan or a home loan, it's the same. As far as I am concerned, it's a loan. Okay, it's a loan where you have borrowed from somebody, and there's nothing wrong in that borrowing, right? I'm assuming that you have taken a loan for some decent purpose, right? Which you took it. If possible, exit some part of your equity. This is just my thought, right? So this is just my thought. Markets are at all-time high. What to do is the question, right? See, we have a long way to go as far as our investing journey is concerned. Is it possible for some of us, especially those who have loan? I'm not talking to the other friends. See, it's a mixed audience, right? I'm looking at the friends who actually are having a loan. Please exit some part of your equity, some part of your equity. That how much part that you decide. You don't have to exit everything. Okay, and don't have to start from the beginning. Exit some part of it. Bring your EMI down. All of you are masters at how loan works, right? The more you prepay, the more upfront you give, the more you are able to close. You can not only bring your tenure down, you can actually start bringing the EMI down. Do you know when EMI, right, for personal loan or home loan, when EMI goes down by 5,000 rupees a month, don't you think it makes some difference somewhere? When it goes down by 20,000, 10,000, even 1,000 for a smaller amount of loan, it does make a difference somewhere. I know that for sure. Okay. So what my advice to all of you, this is the fifth step. Okay. We have finished 4 steps. This is the fifth step. Okay. Exit some part of equity. Let it be. See, already the losers part you have exited, right? And then put an emergency fund. That I already told you. If there is something extra, even after exiting a losers, right? Close your loan here. It's not possible to close the loan completely, FI. I know that. I know that, friends. Okay. Please try to close some part of it. Bring the EMI down, bring the tenure down. How many of you can actually do it? Please give me a yes here. I would love to see that, really. You know. Again, I repeat, keep an open mind. You don't have to exit everything and suddenly close everything. It's not possible many times, right? At least can you start thinking about it? Can I see some thumbs ups or yeses, nos? Wow, awesome. It is possible, right? Exactly, Pankajji. It is not an easy task. Start thinking about it. Start thinking about it. This is the right time, friends. Market is at all-time high. Start thinking. Tell some reason. You know what's the biggest reason of doing the small step? You will have some money more to put for long-term compounding. Okay. Now there are some people who tell me, sir, market will give 12% CAGR. We are only taking a loan for 6%. Boss, this 12% CAGR is over a very long term. It's not guaranteed. We don't know. This loan is 100% guaranteed. I can write and give you low home loan, you have to pay back. Market, whether it gives you or not, how do you know? Market is a dynamic instrument, right? So, you know what? I have many friends who tell me that they want to close the loan quickly. Okay. Now, another debate will come. Oh, tax purpose, this purpose, that purpose. Friends, you know what? In the long term, right? See, I can tell you that definitely having when you make a big corpus later, right? It doesn't really matter. Okay. Oh yeah. Now, very very important question has come. Right. Some of you might not be in India. Right. See, in India also the interest rates are slowly going to go towards a lower figure over a long period of time. Right. But if at all you are not in India, I know that their loan is 1% or 2% or 3%, and then probably it kind of meets, right? But just think about it, right? Having a debt-free life is always good. Again, I repeat, you don't have to close everything. It's not possible many times. Please start thinking about it. Start ensuring that slowly you are closing some part of your loans now. Bring down the EMI, bring down the tenure. This is very good. Okay, fine. Great. So this is your point number 5. Okay. How many of you enjoyed all the 5 points so far? Because we have 5 more points to go. So many friends, you have just joined now. Okay. Don't be clueless, right? I just have a quick recap for the friends. So many friends have just joined in, right? So first step, focus on your work, upskill, earn more. Okay, that's your first step, right? Markets are all-time high. Please work nicely. Focus on your work. Don't try to do anything funny there. Second thing is top up your emergency fund, right? Sell all the losers in your portfolio and make sure that you're topping up your emergency fund. Term insurance is the third one. Health insurance is the fourth one, right? Fifth one was the loan. Right? If you have a loan, please make sure that you're doing it. Okay. What if I don't have home or personal loan? Chill out. The rest of the steps are going to come. Okay, the rest of the steps will help all of us. Okay, all right, great, good. If you all really enjoyed these 5 steps, right? Because I enjoyed it, just press that thumbs up button. Let's see. Let me see how many of you have not pressed it so far. Okay, let me just see. Okay, now next step. Next step. Okay, friends, when you have questions regarding these, right, we will probably take it in the end. I will give a nice question answer time also in the end. We will not just close it, right? I want to keep at least 20 minutes for question answers on these topics. not on general topics. And that's the power of having everybody together, right? Okay. Wow, you're almost 150 people, with me. It's like 150 students. Thank you so much for this opportunity. Okay. Step number six. Step number six. Avoid any kind of lump sum investment in today's market. Okay. Avoid any kind of lump sum in today's market. Okay. You know what that means? What that means is, suppose you have a lump sum which you want to invest in the stock markets. Okay, now where to invest, I'm not covering today. Okay, stock market is a wide range of instruments are there in the markets, right? You have direct equity, you have mutual funds, you have index funds, you have debt, you have so many kinds of instruments. I'm not looking at that. I'm saying that if you want to invest, if you've already decided where to invest, right? Make sure that you do not put in everything at one go today, just to feeling that, oh, okay, market is going up, it can go much higher. Okay, please don't do that mistake now. Okay, I know that there are so many videos being made on, why market is up, why market is down, this stock is going up, that stock is going down. It's okay, yeah, that's how the market moves, like that every single day. Okay, but what I want to tell you, all of you, is avoid any lump sum in today's market. That is your step number six. It's a mantra. Just write it down. Okay, if you have a lump sum, right, make sure that you're splitting it up across at least 12 to 24 months and putting it wherever you're investing. That is your step number six. Okay, is that clear? Any doubts? Okay, avoid lump sum. Make sure that you're putting it up in a beautiful span manner. How much you want to divide, that's up to you. You divide it accordingly and make sure that you put it. That is your step number six. Great. Awesome. Now, step number seven. All of you ready for the next step? Step number seven. Okay. Step number seven is very, very interesting. Okay. If at all you're investing every month in the market, do not stop it. Don't think that, okay, markets are high, maybe it is not a right time for me to, let me stop this particular investing every month kind of thing going, right? Do not stop it. Do not stop your monthly investing. Okay, how many of you agree to that? How many of you think it's possible that, whatever I was doing for so many months, I will continue to do it? Is it possible? Is it possible or not? Isn't it a very simple thing? you know See, I want to bring one more point here. It's a very, very interesting point. People say, don't stop SIP, right? Don't stop SIP. First of all, let me clarify. Systematic investment plan, SIP, is not a product. Just write this down, okay? Systematic investment plan is not a product. It's a plan. It's a methodology. It is a way of doing things. Okay, you can do SIP in one bank deposit. It's called RD. You can do SIP in a mutual fund. You can do SIP in a company. You can buy shares of the same company again and again and again and again. That's also kind of a SIP. Okay, SIP is not mutual fund sahi hai, mutual fund sahi hai. Everyone is telling SIP is not only mutual funds. Okay, SIP means systematic investment plan. It is for any kind of asset. You can own anything. Even this EMI is a kind of a SIP only, right? It's like a meditation. Every month you're going on putting. Okay, please understand this. Okay, SIP is a methodology. It is not a product. Okay, is that clear? That is, first of all, you have to clear it. Wherever you want to SIP, no. See, all of us are sipping. Now you understand what SIP is, right? All of us are sipping in something which we are expecting to grow over a period of time. Hence, please continue that SIP. You know what? I know many friends who are only in RD, recurring deposit, bank deposit. They are putting every month. Inflation, this, that, all that is okay. It is better than not doing. No, please do it. Please do it. Okay. Do not stop your SIP. I've also explained the meaning of SIP. Those of you who are watching this video after this live, please rewind a little bit, understand what SIP means. Is that clear? Okay. SIP is not mutual fund. Okay, SIP means you're systematically investing every single month into something. Mohit, हर month पैसा जाएगा, ठीक है? Okay, so let me share something from my side. This is, I don't know, many of you might be knowing. I have never ever done automatic SIP. Okay, yeah, it's been like 15 years now. Every single month, I used to put myself. See, my salary used to come. Okay, what I used to do was I only used to transfer the money from the salary account to the demat account and then buy whatever I had to buy. Right? Isn't it? Right? So I had a control, and I was very, very clear that I want to put as much money as I can into compounding instruments. I have been doing it for so many years, right? And you know what? Drops make an ocean, right? You keep putting, you keep putting, you keep putting, and eventually, see, everybody talks about, oh, when business doesn't do well, right? When business doesn't do well, the stock price starts crashing, right? And then, what's the biggest mistake we do there? Especially when we understand the business well, shouldn't we be buying more when a good business goes through tough times, right? For this, a manual transfer always helps. Okay, you can put more money sometimes, we can buy more units or more shares sometimes. Okay, so please remember, do not stop your systematic investment into any of the compounding instruments when the market is hitting all-time high. Okay, but you can start doing some manual sips also, like me, if you have that much amount of discipline. Otherwise, no, just do a normal sip. Just keep working hard. The step number one, you remember, right? Step number one was work hard so that you can earn more, and there'll be more to put into the compounding instruments. Okay, right? Super. Okay, is this very, very clear? Is this very, very clear? Okay, awesome. So, how many of you are enjoying the 7 steps? Okay, all of you remember the 7 steps now. All of you remember. We'll do a summary in the end. Don't worry. Okay, so 7 steps we have covered. Friends who have joined in just now, just please excuse us. We have already had 50 minutes of session. You can stay with us. Okay. Eighth step. Eighth step. Asset allocation. All of us talk about it, right? Asset allocation. Right? Okay. All right. Cool. So let's get into that. Okay. Just have one sip of water. All of you also have a sip of water wherever you're chilling. Okay. There are so many participants, right? Those who have not pressed that thumbs up button, just hit it. Okay. Oh no, I'm talking like a YouTuber. Just hit it. And then the YouTube algorithm will make sure it reaches everybody and all that stuff. Right. We're going to now step number 8, asset allocation. It's a very, very important step. Cool. Friends, asset allocation is not something like a formula for everybody. Please remember this. Asset allocation differs from person to person, depending on age, depending on the commitments, depending on which phase of life we are in. Please understand that, okay? Each of us have our own asset allocation, correct? Okay, some of us have a very good asset allocation in real estate. Some of us make sure that we are in the traditional FDRD kind of investing, right? Some of us make sure that we understand businesses, we are able to take good stakes in good companies and build it up over a period of time. Some of us are very, very comfortable in index. Some of us love to have mutual funds, right? Isn't it? So please understand this. Ideally, some of us like to get into gold, right? But let me tell you, all of us, first of all, need to understand that this is just my advice, okay? It's just my piece of advice for everybody. In all our lives, there is a wealth creation stage and wealth preservation stage. Do you all agree with me? There is a wealth creation stage and wealth preservation stage. Correct? All of you agree to this? It's a very simple concept, right? Okay. See, there are many people who are in wealth preservation stage. There are many of us who are in the wealth creation stage. Okay. So please remember that when we are in the wealth creation stage, we should put in instruments where the instrument is really working hard and generating good cash and it grows over a period of time, right? We should look for growth. In wealth creation stage, look for growth. When I say growth, do not mistake me, friends. You don't have to go for cheap compounding instruments or some instruments which are showing us very good returns 12%, 14%. That's not at all my intention. My intention is look for compounding instruments which have a very good growth runway of 20 25%. Growth means I'm not talking about price, I'm talking about the potential of the business to kind of grow its earnings above 15 20% every single year over a long period of time. To be frank, there are lots and lots of businesses like that. You don't even have to go to the smaller space. You can look at the bigger space where the companies are well established, right? And they are actually doing amazing work. They are contributing to society, contributing to customers. They are very profitable. There are many, many companies like this, right? Look for such businesses, especially in your wealth creation stage. Please write this down. Okay. There are so many people who are in the wealth preservation stage. For them, a company which is giving dividend of 5% is more than enough. Why should we follow that? Especially when we're in wealth creation stage, right? Let us look at our asset allocation. Let us not look at somebody else who's in some other phase of life, right? Isn't it? So just keep this in mind. This is very, very important for all of us to understand. Okay. Now, I actually saw a very, very interesting thought by somebody. I'm just sharing. This is not my thought. It's somewhere I read somewhere. Okay. Uh, just keep this in mind. Okay. There is some rule which I found very interesting. Okay. It's not something which I am following or something, because see, there are generally two kinds of pockets of investment. Okay. Right. One is equity, one is debt, right? Equity means you buy a piece of a particular something, you buy which is going to work really hard, which is going to generate something, and then we get a byproduct of that in the share price. Correct? This is what it means as far as equity is concerned. Debt means what? Debt means you are funding somebody. We are giving a loan to somebody. We are not taking a loan. We are giving something to somebody. That person takes that something. That person makes it work, and he or she will give us a fixed rate every single year. This is what ideally a debt and equity. I'm just giving a. It's not exact. Okay, there could be small variations here and there. Equity is something which can generate a huge amount of wealth based on how that compounding instrument works. Debt means that person is taking and then doing something with it, but they will give us some fixed amount every single year. It's that fixed also can vary. For example, if you take a debt fund, you might get 5% to 8%, 9%. That depends on the market conditions and so many other things. Okay, so equity and debt. This is the two general, whatever we have, right? There was a nice rule saying based on your age. Okay, this is not my rule again. I just read it somewhere. Just sharing. These are all the various perspectives, right? Let's say you're 40 years old. The rule says if you're 40 years old, around 40% should be in debt, 60% should be in equity. This is what the ratio I have read. I found it very interesting. Okay, see, I'm 35. I have around 50 60% of my wealth in debt, right, and rest of it in equity, because I'm kind of somewhere in the wealth preservation stage. I wanted to do a lot of things, I at least to support so many families. So I kind of kept something which can generate some kind of returns over a long period of time, just purely for somebody else. Okay, so keeping that in mind, right, I found that very, very, very interesting. Okay, your age, that much percentage will get into debt, rest of it equity. That is one rule. Second rule is do not change your, once you decide on an asset allocation, right, do not change it. Market, let it be an all-time high, market, let it be an all-time low. Don't change your asset allocation strategy, especially if you're a long-term investor over 10 to 15 years of uh, you know 10 to 15 years if you're going to look at, right? Can all of you give me a nice yes here? I've given you so many thoughts on asset allocation here. See, I'm trying to give various pointers. for all of us to think. You know, right? FI is a person who teaches everybody how to fish. I'm not here to kind of give you something right in your hands, right? Okay, Sanju, I request you not to put this, put any company name and stuff. This is out of discussion. Please retract, else I have to block you. Okay, right? Great. Okay, so all of you, please remember: do not change your asset allocation strategy. Do not, you know, change that. Okay, cool, awesome. That's the eighth point. I've explained asset allocation. Don't change it. Also have also have given you some perspective, saying that uh, the rule, right? That rule was a pretty interesting one. I kind of liked it. It kind of gives a discipline, right? But again, I want to share with you in wealth creation stage. Look at equity as your real wealth creator, not the debt. Okay, you don't have to. To be frank, I'll tell you, if you have a health insurance in place, if you have your term insurance in place, if you have an emergency fund of 12 months or 24 months, right? Why do you need that? Yeah, tell me. Second thing, hey, one very important question I forgot to ask all of you. Huh? How many of you are having provident fund from the company automatically? Can I just say yes? Because provident fund is a debt, right? It's a wonderful debt. You already have. See, provident fund is a very underrated thing. Huh? It's amazing when you come out, right, after so many years of service. It's crazy that amount will be so awesome, right? I think provident fund really does a fantastic job of debt. So actually, you know what? Coming think of it, PPF or EPF or VPF or whatever, right? That's an awesome debt instrument. Okay, you won't believe how amazing it is to see that kind of cash coming in, right? So please remember, friends, the mantra: in wealth creation stage, focus on equity, especially when the other steps are all taken care. See, we are right now on eighth step. There are two more steps left. Eight steps, I think all of us have understood, right? Right? Those eight steps, if you are taking care so far, no, how does it matter? Market is at all time high, all time low. Does it shouldn't matter right now? But there are two more steps which are very important. Okay, right? So just keep in mind. Okay, okay. Step number nine. Step number nine, friends. Whenever you see markets at an all-time high or an all-time low, always remember this: zoom out. It's a very powerful technique. I do it every single time. Have you ever seen me negative on Twitter? I'm never, right. When the market is fully falling, also I'm the same, and when it goes up, also I'm the same. Partly because I'm a very long term investor. I kind of buy businesses which I like. I kind of sell businesses which I don't like. Right? It's pretty simple for me. But what I want to share with you is zoom out. Just write it down. Zoom out. It's very powerful. Just zoom out. Just look at the Nifty or the Sensex chart or any company which have grown earnings over so many years. Okay. Don't look at the companies where the earnings have really fallen or never picked up. Look at the businesses which have done decently, not in terms of price, in terms of the business as such. Right? If you want to look at Indian growth, just look at the Nifty and the Sensex. Right? Just zoom out 15-20 years. Do you think you can see any crash? All the crashes will look, you know how it will look, the crashes? Yeah, Chirayu, I'll just elaborate, right? Just take the Nifty or the Sensex chart of 20 years. Okay? Just look at the fall of 2020, the fall of 2008. You know how small they will look when you zoom out? Just to try this, okay? After just open a chart of any Indian growth story, that is Nifty or Sensex, or any company. There are so many companies which have grown their earnings over a period of 10-15 years. There are so many, okay? Yes, Harshadji, just a spike. It's a small, it'll be crazy, okay? See, when you're looking at 2020, oh, it's like down and up and all. You just zoom out, yeah. Zoom out. It's crazy. It's crazy. Just zoom out. You know what? Next time when something falls, if you want to know what is my real secret of staying positive always, on India, it's the zooming out. That is your step number nine. Zoom out. Just zoom out. Zoom out. Look at companies. Oh, there are so many great businesses falling 80%, 60%. How they have done in 15 years, crazy. In 2020, do you know how many businesses you saw fall 60, 70%? The top companies falling. How they recovered? Zoom out. Okay? Zoom out. This is the mantra for everybody. Okay? Yeah. Those of you who love this, right, just give that thumbs up shot. I just want to see how many of you have not given it, right? It's crazy. Just zoom out. Okay? This is your ninth step. Friends, before I go to the 10th step, I want to thank everybody who has been here, right? Uh, I want to thank everybody. Friends, can you all hear me? Can you all hear me, see me? Perfect. Awesome. Right. These 9 steps are crazy. Please ensure that you are, you know, making sure that you're keeping these 9 steps. Okay. We'll have a small revision in the end. I hope all of you will stay with me for the next half an hour as well. Okay. Especially the people who have stayed. Again, 150 to 160 friends have stayed with me. Just stay with me. Awesome. Last and most important step. Most importantest step. There's no word like that, but the craziest step is association matters. Just write this down. Association matters. The more satsang, your company matters, right? Your association matters. Okay. If you are in the group of people who are completely paranoid about everything which happens, you will become like that. If at all you are in the company of people who are extremely long term, who are looking at every fall as an opportunity, who are talking about all these things, right? Like making sure that you have your cover ready, your kavacha, your kavach, right? In Hindi we say kavach, the armor. Association matters. Just, I'm telling you, right? This is crazy. This is crazy. Okay. This is your 10th step. Association matters. If at all you have survived doing these 9 steps, it's only because of the 10th step. Okay. I'm not getting associated with me. Not at all. Not at all. If at all my thought process, my philosophy is against, no, just leave it. FI. Just do not come. Disassociate. But associate with the right people. Okay. Because you know what? The more we associate with people who have reached where we want to reach, it will be a beautiful path. It will be a wonderful path. Okay. So, friends, 10 point, association really matters, really works. You know, when the stocks were falling down in so many of the falls, which I have experienced myself, I have a very small set of investor friends whom I discuss with. We have very healthy discussions, very rational thoughts. Those discussions help me to stand those tough times in businesses. You know, those associations help me to sell the wrong businesses at the right time, right? How to associate it with like-minded people? Friends, it's very easy. Just look at how people react during the worst of times. Just look at people how they react at the worst of times. Many people ask me how to find great managements. You know how to find great managements? Great managements are the ones who take the right steps at the wrong times. When I say wrong times, I'm not talking about the wrong time. I'm talking about the worst of times. When headwinds hit you, when the whole industry is going to a tough period, there are so many companies who go back on growth, strengthen their balance sheet, and come back strong in the 6th or 7th year. We don't know, right? There could be 3, 4, 5 bad years for a business. But the business, whether it dies or stays, that purely depends on how they react during those tough times. So let me tell you, association matters, company matters, connected. Association, company, both matters. Okay, so this is your 10th step, right? Friends, before I open Q&A, on these steps, right, we can definitely discuss on these steps, right? Before that, let me tell you, let's have a quick revision on these many, whatever we have done so far, right? Okay. Now, for those friends who are just joining in, right? Just trying to tell you. First step, market is at all-time high. What to do, right? So just a quick summary, right? First step, focus on your work, earn more, ensure that you have enough, more than enough, right? Focus on that. Automatically, market will take care of itself. Second point, build up your emergency fund. Sell all the losers in your portfolio. Whereby losers, what I mean is that the businesses which are not really doing as per your expectation, please sell them and make sure that you're topping up your emergency fund. Please watch that emergency fund video. Third is term insurance. Make sure that you really consider taking it. Health insurance. Do not depend on your company for health insurance. Very, very important. Fifth one, fifth step. Those who took loans, those who are having a personal loan or housing loan, this is a great time to sell some part of equity, right? And ensure that you top up a little bit, reduce your EMI or reduce your tenure. This is very, very important. This is your step number 5. Step number 6, avoid any kind of lump sum investment at this time. Do not do it, right? When the market really falls, sometimes very good opportunities come. That time lump sum can get in. Today, do not get into any lump sum. Make sure that you span it over 12 to 24 months. That is up to you. Nothing wrong. Just span it. You will get a nice average. Step number 7, do not stop your systematic investments into your markets. Do not stop that. Okay, just keep on putting it. That's the 7th step. 8th step is your asset allocation. Do not change your asset allocation just because the market is sitting all time high. Just focus on the process. Keep on doing it. If you're comfortable with debt and equity, please go on investing in the same manner. Right? I told you one very important thing which I read. Right? Whatever your age, that much percentage try to put in debt and equity. But however, that's not a standard rule. That's not a standard rule. Right? The more powerful rule is in wealth creation stage, focus on equity. Debt is your provident fund. That is a very, very good debt to have. 9, step number 9, zoom out. Zoom out. Indian growth story is awesome. Okay, just zoom out and see. You can see that every big fall looks like a small glitch. That is your 9th step. Your 10th step is association matters. Without association, nothing happens here. Let's all be perfectly associated. Okay, so that's what I had for this live session, right? One quick request, one small homework for everybody, right? As you know, or many of you know me very well, right? In the comment section of this particular YouTube video, please put all your learnings. Just write it down here. Just write it down. Okay. Write it down. It's not for others to read on. It's for ourselves to crystallize. See, 10, 15 years later, when we look at these videos, right, we had a connection here. We just saw what exactly is there, this particular thing, right? Whatever we have learned, let's put it down. Right. Second thing I told you that YouTube has some algorithm. There are so many of you here. Please press that thumbs up button in the bottom. It's not at all for me or something. It's just that this can reach a lot more people, right? If you press that like thing, no, it hits a lot more people based on the YouTube algorithm, right? That's something which I wanted to share with you. Most important is the comments. Okay, please put your comments down, right? There are almost, I think, 140, 150 of you who have been with me here, right? Please put your comments. The comments are very important. It's not for me, it's for you to crystallize. Okay, so that's one thing, right? And yeah, I think now we can have a Q&A if at all any of you want to ask any questions with regarding to this, whatever we have discussed, right? Feel free to do it. I will be here for 20 more minutes, right? I would love to answer anything which you feel is relevant to this topic, right? So please do that. And I really want to thank everybody. It's not easy for all of us to sit together for 60, 70 minutes, right? So yeah, I'm opening the floor for Q&A now. Any kind of questions, let's take it, right? Yeah, so Neha Sheth is asking, big question, when to sell investment and book profits, right? See, ideally, this is not in perspective to this particular session, so I'm not going to kind of cover it in detail, right? But generally, what I do is that the moment the investment doesn't meet my initial thesis in the long term, I kind of exit it and look for other opportunities which kind of meet my thesis. I have nothing. I can exit a business very easily, but it takes a lot of conviction to be broken for me to exit a business. It happens pretty rarely to me. What do you mean by you own businesses? See, share market is a beautiful, beautiful place, right? Where we are getting a piece of a business, right? Can you imagine that you can actually be a proud shareholder of some product which has come home, right? You have so many products at home, right? It's so awesome to own one part of it, right? And imagine, right? Just think about it. If at all you want to beat 4%, 5%, 10% kind of returns, the only way is choose a business which is growing its earnings much, much faster than that, right? So what will happen? When you own a business, the business is generating more and more earnings. We will also be able to grow our investment in the same particular way, right? Maybe plus or minus will be there, but over the long term, we will be able to create wealth. That's why we own businesses. Okay. Now, mm, okay, what is your process to find intrinsic value? It is totally out of perspective here. Okay, the stream had a meditative effect. Thank you so much. Really, it really means to me, right? Now, mm, one more question which I saw was point number 9, triplicate Prabhu, zoom out. Here we are discussing about market peak, but zoom out strategies relate to market fall. No, not really, not really. Even the peaks will be what it will smoothen out. Just have a look. No, it doesn't matter. It really doesn't matter. Especially if you follow all the 10 steps, right? It won't matter. If you're only looking at one or two steps, it will kind of matter. Okay. So that's what I wanted to say. Okay. I totally understand what you said. Because when you zoom out, right, the highs, you just look, no, the high of 2007, it's very low compared to today. Look at it that way. 2007 had a high, right? But today, where is that high? Aren't we very far away from it? That way also we can look at it, right? Prashant Kumarji is asking Sukanya Samriddhi or equity for child. Uh, See, to be frank, right, I am a person who believes that children should make their own destiny. My parents, to be frank, they only gave me a good body, good mind, and they ensure that there's no debt transferred to me. Okay, so keeping that in mind, right, I would say whatever is long term, do it, but give your children a healthy body, healthy mind. Let them make their own destiny. Okay, that's what I would say. Sai Neeraj, sir, till date I'm thinking that PPF is of no use, like no much returns to be generated. Is my belief true? Absolutely not. It's a very powerful thing, Sai Neeraj. Just continue it. Continue it. Okay. Do not leave PF. Continue your PPF because that is something which is not too dynamic. It will take care of you when you really need to get taken care of. Okay. How to find growing businesses? Sharu Bajpeji. It's not in perspective of this particular thing, but I already gave a small hint in this video. Just have a look at the video. If at all you've joined us a little bit late. Okay. I'll get fear when market goes high. Premnath ji. Yes, we all get fear. Okay. Nothing wrong with that. If you're getting fear, you're a perfect normal human being. With these 10 steps, the fear will go down drastically. Mukunda Kumar, can you please explain asset allocation once again? Mukund Kumarji, please go through the video once again. And if at all you have any questions, just send me an email, right? My email will be there in the description. Please just send me an email if at all you didn't understand that again. Okay. Ashutosh ji, my query is on bullet point number 5. To reduce the loans, what if I am on stage where I have two small kids and their education started? Home loans also there. Ashutosh ji, I totally understand. And when I told you, right, I told you one thing. It's not easy. It's not easy to do it, right? It's not easy to just close it, right? Because there are so many other things. What I'm saying is, as much as possible, do it. You will not regret because every time you kind of reduce a tenure or you reduce your EMI by let's say 2,000 3,000 rupees, right? What happens is that money can be invested, no, or that money can be used for something else. Just keep that in mind. That's my intention. Okay. Okay, Ashtosh, yeah, that's what it is. Venkat ji is asking, my term insurance covered until 60 years. Is it okay? Absolutely okay. Okay, Venkat ji. Venkat ji, what my thought process, of term insurance. See, by the time we are 60, 70, right, we should have created enough corpus, which is like 10 times what the term insurance will cover us. So don't worry. Okay, go with this. Just 60 years should be good. 60, 70 years should be good. Okay. Shrikant Swamiji, 50, 30, 20 rule for investments. I don't know what these rules are, but I have kind of given one rule. Just keep that in mind. Okay. Uh, awesome. Mohit ji, thank you for that. Okay, point number 7. While doing SIP, Dhanraj ji is asking, point number 7. While doing SIP, do we need to consider some percentage exit or continue for long term? No. See, SIP is for a purpose, ideally. Okay, we create a corpus for a particular purpose, right? So just go on doing it. Okay, do not look at part exit. But however, I told you some point, right? What was that step number 2? Emergency fund. If you want to top up, do it. Sell a part of your SIP or mutual funds, whatever, and top it up. See, create an emergency fund fast is what I'm trying to say. That was my really second step, right? Please keep that in mind. Okay. Then, uh, please explain about good business. Raji is asking that is slightly out of perspective here. Okay. Uh, yeah. Vaibhavji is asking, sir, having an adequate health plan is good, but class settlement is very difficult and tedious work. That process has to be known by everyone and is not given clearly by companies. Yes, Vaibhavi, that is correct. That's why we need to do some research and then making sure that we go. But I can tell you one thing, having a health insurance is better than not having one. Just keep that in mind. Okay. Hold your thoughts. Send me an email if at all you, of course, I don't recommend anything and all, but we can have some discussion. If you want, please send me an email. We can take it later also. Premnathji, good governance companies are very high PE and price. Yes, absolutely. Okay, good companies are always expensive. Kunalji, can you please make a video on term insurance specifically? It will help. I know that, but to be frank, Kunalji, there are a lot of people who talk about term insurance and health insurance on. There are much more better qualified people than me. I think they'll be a better bet compared to me. Okay, I think I would like to do more videos on generic topics, but definitely I'll keep that in mind, Kunalji. But send me an email on this. Generally, if you have any thoughts, I can probably help you out. Right? Uh, how to come RKG is asking how to come right figure after this COVID for health insurance. RKG, I think you just joined in. Just go back, listen to the whole video. Okay, I have not given the right figure, but what I said is that having some health insurance is always better than not having one, right? So at least start. You can top up later. Okay. Subhoji should have exit plan in business whichever. I have never had an exit plan so far ever, right? To be frank, and markets have been kind over the last 15 years, right? Yes, I've had losers, I've had winners, but there's no exit. The exit plan is pretty simple, right? When something doesn't work as per your thesis, I book out. Even if there's a huge loss, I don't care because I can make it up somewhere else, right? Okay. Ashtoshji, I hope I've answered your question in some way. If you want, just send me an email. If at all, I need to add some more points to that. Okay. Kalyanji is asking PPF is okay for debt fund. Absolutely okay. Absolutely okay. I love any kind of provident fund for a debt. Okay. Nitin ji is asking, I am at my growth stage, have asset allocation in all asset classes, want to buy commercial real estate, partial loan, that partial amount already invested in equities. What's your suggestion? Nitinji, better not to take a loan. Try to build enough corpus where you're reducing a loan as much as possible. You can buy a commercial real estate even few years later. I'm telling you, this you might be probably buying it somewhere else. Probably a much more developing place. But you can. I think it's better not to do that. Focus on your asset allocation today. Go for it. Okay. Ganeshji, what percentage of wealth should be in equity? I told you, right? If you're in wealth creation stage, have maximum equity. Means equity when I say any place where the compounding is having high potential, right? Have it there. Okay. Uh, awesome. Awesome. Uh, okay. Any thought on gold? Uh, to be frank, I've never invested in gold till today, so I have absolutely no thought regarding that. Uh, Yeah, Srinuji is asking a very, very important question. For those who are staying with me till 9:30, right? We'll kind of close at 9:30. So, means after 1.5 hours, right? We have had good discussion. Srinuji is asking for government servant, medical insurance is required. See, to be frank, what I always believe is that do not depend on your employer, right? Take something, no, Srinuji. Even if you take a small amount, no, at least it will be there. See, the problem is, Srinuji, tomorrow, for some reason, let's say you're not completing the tenure or you come out in between, it can happen, right? Anytime it can happen. If at all you come out in between, right? If some health issue is there, you will not be able to take a fresh insurance. So do not depend on employer. I tell even the government servants also, keep something separate, no 3 lakhs, 5 lakhs, something you keep. It's a small premium, keep it, because tomorrow you don't have to depend on that. Just keep this in mind. This is just my thought. Okay. Yogesh ji is asking, FI sir, is it good to book profit as market? I think I already have given this in this video, Yogesh ji, right? If you go through the entire video, you'll get all the answers. Right? Harsh ji is asking, sir, I'm 24 years and just started earning. How should I start? What should be our approach? Harsh ji, I already told this in the video. Choose some really good stuff and then start allocating. Okay. Okay. I'm just trying to not take the repetitive questions, right? Which is best? Okay. Oh, I see a lot of thank yous. Awesome. Right. Really, really appreciate that. Right. Okay. Great. Thank you for the emergency fund shared with everybody. Awesome. Hey, those of you who have just come in here, right? I'm so happy that I could interact with all of you. We still have 8 minutes to go, right? We can still be together. Those who have not pressed that thumbs up button, just press it. YouTube has a wonderful algorithm to kind of show this video to a lot of other people. Okay. Probably it'll help somebody somewhere. That's what I feel. Okay. Awesome. So great stuff then. I think there are no more questions. That's great. I think I'm so happy that we could keep all the questions related to this topic. And this is the kind of audience I really, really love, right? It's a great audience. Uh, yeah, RKG, you're asking your thought on land investment in rural areas. Yeah, if you feel it's a compounding instrument, why not? If you feel it's a compounding instrument, just go for it. Go for it. Right? I mean, I'm not here to tell you this is a good one, that's a bad one. I'm saying if you're in wealth creation stage, allocate maximum in place which can really grow faster. That's what it is. How to be FI? You mean me? Just be cool, be calm, don't listen to anyone. Okay, have independent view, right? Be cool. Okay, be healthy. That's all. Right. Okay, I would love to read all your comments. Yeah, so just put some nice things for me. Let me read. Okay, let me see. How did you find the session, friends? Those of you who are still managing to stay back, right? How did you find the session? Those of you who just joined in, just go through the entire video. Okay, entire video. Yeah, tomorrow Sunday, no, aram se sit and watch the entire video. Wow, Fun Street G is there. Deepak Agrawal. Deepak G, is that Jill's Deepak? Is that Jill's Deepak? I don't know. I'm so happy. Wow, so nice to see all your comments. Okay. Hey, so wanted to check. See, I'm planning one more live probably next 2 3 weeks. So I cannot do it every weekend, right? Because I have so many other things like chilling out and having fun with family, right? Uh, hey, all of you, my email is always open. Okay, if you want to ask any questions, please ask. Of course, not on stocks and stuff. You know me pretty well now, right? Just send me any kind of thoughts. Send me an email, and we will kind of connect there. Right? Email is a great place to connect, right? Especially with this in this session, right? So in this particular session, what we covered, any kind of doubts, just send it. Just send me on email. Okay, with this understanding. Right? Awesome. So nice to get all this. Okay. Again, yeah. Thank you so much. Thank you so much, friends. Ian D'Souza. Just send me that question on email. I would like to address it there. Okay, we do that there. If you lose a job, should we change from wealth creation to preservation stage? Absolutely not, right? We need to find a different job, make sure that we are able to work and earn much more, right? Great friends. Those of you who want to leave can leave. I have 5 more minutes. I'm going to stay here for 5 minutes. I'm not going to get out till the complete session is over of 90 minutes, which is what I promised everybody. Right? If you have any thoughts, any good thoughts for me, please do that. Those of you who have not pressed the thumbs up button, just press it. It will encourage YouTube to kind of share this with a lot of people. Right? Nitinji, thank you so much. Really, it's so nice to interact with all of you. Really, it's absolutely fantastic. And you've been a fantastic audience. Okay, fantastic audience. Hey, one more thing. Whenever I put this on Twitter, right, this tweet, can you all respond back with a nice photograph of your notes? I would love to see your notes. How many of you took down notes? Let me see. How many of you took down notes here? Can you just put I took down notes or something? I want to see how many of you really took down notes. How many of you took down notes? I'm asking. Let me see. Notes on phone. Awesome, awesome. Yeah, if you can put a snapshot or something, it'll be encouraging for others, right? Awesome. Okay, Pundrik ji, I didn't take any note today. No problem. Yeah, after this, just make sure that you write down all your points, right? Make down it. It kind of crystallizes the entire thing, right? Awesome. Oh, Shrikant ji, you want to share it in the? Yeah, no problem. Yeah, whenever I give the exercise, you can share it there. Yeah, absolutely. Awesome. Oh, cool. Samir ji, you're going to calculate emergency fund figure tonight. Okay. But please watch that video, huh, if you have not watched it. Yeah, Griga. If emergency fund is used, how can I add? Never use the emergency fund. That emergency fund should be only used for emergency. If at all an emergency you used it, then make sure that you're kind of again building it up. Kuldeep ji, thank you so much. Kuldeep ji, I think you should write me an email, right, about what you think. I would love to connect with you there. Yeah, Kuldeep ji, I would love to. Oh, Prerna ji, you came in the middle. Yeah. Make sure that you kind of, you know, yeah. Deepak, are you the Jills guy? Are you Jills Deepak? Tell me, are you? I don't know whether you are. If you are, then tell me, yes, I am. Doing some marketing for you, for your channel. Jills, great YouTuber. Awesome, awesome. Association truly matters. Absolutely. We have 2 more minutes left. 2 more minutes left, and there are so many of you still joining in, right? Make sure you hit the thumbs up button and make sure that you guys have a great sleep. If possible, watch the video again tomorrow, right? It's probably 1.5 hours. You can actually get everything, right? Kuldeep ji, read this please. I have learned about true financial independence from you. It's not a lavish life, but simplicity, being humble, be kind, food, clothing, shelter, most important, insurance. Yeah, awesome. Great to know that. Awesome. Super. Super. Cool, friends. It's 9:29. Let's have a great night. Okay. Enjoy yourselves. Stay calm. Stay peaceful. Okay. Nothing is going to happen. Long term, we'll all be connected. Right. As I said, my email is perfectly open. Just send me an email. But please don't ask ridiculous questions on stocks and stuff. Right. Anything which we discussed about today, please send me an email. And friends, I can't thank you enough. Those of you who stayed with me for the entire 1.5 hours. Uh, thank you, really. Thank you so much. It means a lot. It means a lot. Okay. Thank you then. I think you can all leave. Do you think I should just close the meeting or you just all of you just leave slowly? Yeah, I will wait for it to go down. Let me see how many of you leave. Awesome. Cool then. Thank you so much for joining. Bye bye. Bye bye.